Most people think this is a political story. They're wrong. Politics is what you're shown. Money is what's moving. When Trump talks about 2026, supporters hear strength. Critics hear danger. But markets hear something else entirely. Because large systems don't argue. They reposition. And when they do, ordinary people don't feel it immediately. They feel it later. In prices. In savings. In opportunities that quietly disappear. This is not a story about Trump. It's a story about what governments do when money stops behaving. History has a pattern. When a system enters stress, it puts a face on the problem. A leader. A speech. A headline. Because faces absorb blame. Systems don't. But money doesn't respond to speeches. It responds to structure. Debt levels. Trade leverage. Currency confidence. Capital flow. The mistake most people make is believing power is loud. Real power moves quietly. Future dates are never accidental. When leaders reference years ahead, they're not predicting. They're preparing. 2026 isn't a promise. It's a window. A point where decisions made earlier fully show their cost. Because economic pressure works like this. First, expansion. Then strain. Then adjustment. And the adjustment never lands where it started. It lands on middle-income savings, fixed salaries, late movers, not on the system that created it. Every government, regardless of ideology, faces the same math. When debt grows faster than productivity, choices shrink. Raise productivity. Cut spending. Or restructure pressure. Most systems choose the third, not by announcing collapse, but by changing rules at the edges. Trade terms, currency posture, fiscal priorities. Who gets protected and who absorbs friction? This isn't political courage. It's financial necessity. Markets don't wait for clarity. They move on signals. When a major economy hints at harder trade lines, tighter control, strategic reshoring, power consolidation, capital asks one question: where will friction increase and where will it be absorbed? Money exits discomfort early. People exit late. That's why by the time the public feels inflation, the repositioning already happened. Economic transitions don't destroy wealth evenly. They reprice it. Cash loses patience. Assets gain advantage. Debt changes meaning. What feels like? Higher prices. Lower purchasing power. Why am I working harder for the same life? Is often a system saying, you stayed still while the structure moved. Not because you were careless, but because you were busy surviving. Political arguments keep people distracted. Left versus right. Supporters versus critics. But money doesn't care who's right. It cares about control, predictability, exit routes. That's why different leaders often produce similar economic outcomes. The ideology changes. The financial mechanics repeat. Every major power shift follows the same sequence. Confidence. Adjustment. Realization. By the time most people reach blame, the damage is already done. This isn't about fear. It's about awareness. When systems tighten, they reward flexibility, early positioning, and understanding cycles. and they punish. Blind loyalty, static income, and waiting for clarity. Not because the system is evil, but because large structures cannot move gently. Trump isn't the story. Neither is any single leader. The story is this: when economic pressure builds, governments don't ask permission. They rearrange reality. And the people who suffer most are rarely the ones arguing online. They're the ones who believed nothing would change. We don't lose money all at once. We lose it quietly, gradually, by trusting systems longer than they trust us. History doesn't repeat loudly. It repeats calmly. Until one day, people look back and say, "I didn't see it coming." But the signs were always there, hidden in plain sight.